What I do know is that the way in which value is transferred, the ability to move with the US dollar pegged to it, or some commodity pegged to it, is actually going to make it more widespread.
Welcome to the Rain Insights podcast. I'm Emily Donahue. Today, I'm excited to bring you the inaugural episode of our new podcast series, Crypto Corner. Cryptocurrency adoption, not just by individuals and investors, but also by organizations and even governments as legal currency, represents a vast new world of financial possibilities. It also opens the door to new risks. In this episode of the Crypto Corner podcast, we discuss the geopolitical risk and national security implications of cryptocurrencies, as well as looking back at how crypto has been disrupting the status quo for more than a decade. Our host is Rain founder David Lawrence. His guests are Joseph Hanvey, Chief Compliance Officer at FalconX, and Tim Murphy, President and CEO of Consortium.net.
All right, first of all, special thanks, Tim, Joe, for joining and being part of the Crypto Corner. And I thought, since this is the first podcast, and we'll be getting into a number of subjects both this week and in the following weeks, I thought it would be helpful to do a slightly longer introduction to our audience of your respective backgrounds and how you came to be interested in and to be part of the space broadly known as crypto. But each of you took a slightly different journey in getting here, and both of you are among the most thoughtful and enlightened individuals I know in this space. So, Joe, why don't we start with your background and leading up to your current position?
That's great. Well, thank you, David, and it's a pleasure to be on. And Tim, it's a pleasure to be on this podcast with you to talk about these issues. You know, I turn around and I ask myself, how did I get into crypto? It's been 3.5 years of my life. And I think it all comes down to curiosity. You know, I started out back in 1995, actually, looking back at it, working on the Hill for a member of Congress as a staff assistant, and then finding myself working at NESD 4 years later, now FINRA, in 1999. And I was involved in something called an anti-money laundering sweep. And that was in July of 2001. And it was coordinated with the SEC and the New York Stock Exchange. And then 9/11 happened. And here I was, an examiner that was involved in AML, but I really had no clue. And back then it was, you typed literally in probably Internet Explorer, Netscape, BSA, and it came out as Boy Scouts of America. And that's exactly how I started my career in regulation. And the last 20 years, I've been focusing on primarily anti-money laundering matters. And, traveling the world, working on deferred prosecution agreements, working for financial institutions, working for consultancies. And 3.5 years ago, my curiosity was piqued. And I started working for a crypto company that was one of the it was a crypto company that actually had, a lot of great ideas about getting involved in order execution, looking and feeling like a normal order routing type of broker-dealer environment. It never took off. Then I went to another crypto company where we created 2 stablecoins, one US dollar backed and one yen pegged stablecoin. And then back in July, I started as a Chief Compliance Officer here at FalconX. And so my journey into crypto is continuing, and I'm loving it. And I'll pause there, turn it back over to you, David, and we're looking forward to going any deep dive.
Okay, great. And Tim, your background, you and I have known each other for a number of years, and one would probably be a bit surprised to know that the former Deputy Director of the FBI has not only been a close follower of this space, but an investor as well, and a very successful one. So maybe you can just sort of share with the audience your broad background and sort of how you came to the space.
Yeah, sure. And thanks again, David, for having me, and Joe likewise. I think Joe hit it on the head when he talks about you have to have a curiosity, right, and a continual learning. in the world today, especially as fast as technology is moving. So, David, I spent most of my adult life in the FBI, retiring as deputy director, and during that time, saw a number of bad actors using cryptocurrencies in the early days. And that was the branding then, right? Crypto was used just for illicit activity. And then upon leaving, the FBI, and then I worked on Wall Street for a few years, and then I'm done my second startup, all in the technology space. And so I've always had a curiosity around Bitcoin, specifically at the beginning, and cryptocurrencies in general. And I also today, I sit on the board of Western Union, and I sit also on the board of Epiphany, which is a global exchange for cryptocurrencies. And with my curiosity, was around, really as an investor, really doing due diligence around 2015, 2016, and having been involved in the good portion of my investments are in Bitcoin and cryptocurrencies, as well as others, diversifying. But it's just always intrigued me, and to watch this space grow like it has, and to just see the world change similar to the adoption of the internet. And so that really is what piqued my curiosity, is the ability to move money. And at the time, the anonymous nature was interesting, although it's not as interesting today. And I think it got branded that many years ago. But generally, the background was curiosity, and seeing it used for illicit activity. And then today, watching the adoption of Bitcoin and cryptocurrencies since 2009. And I think it really is going to have an impact on the world in the next 5-10 years.
And what I'll mention to our audience is both you, Tim, and Joe have sort of been leaders in trying to bridge the gap between the enforcement and regulatory communities and those groups that are investing, building platforms, building currencies, et cetera, to promote mutual understanding. So in that vein, let me give a somewhat famous quote, which is misunderstood by, unfortunately, but Marshall McLuhan, the renowned expert in technology and communications and trying to understand why the world behaves the way it does, coined a phrase, the medium is the message. And as you look at digital currencies broadly, and you see, various, I'll call it tropes that are attached to it, the future of money, people describe it as the Wild West. There are different camps that, are highly incredulous, and others that are, quite frankly, they're the evangelists around the space. What should we understand? What is the real message around the technology, and I'll call it the following around cryptocurrencies, and sort of why has it emerged, why there's so much speculation, why there, quite frankly, so much money invested in digital currencies? Joe, why don't we start with you?
Well, I thought maybe perhaps, David, we would have started off with a more difficult question, but that's pretty easy. That's my sarcasm at best. That might not translate.
No, it translates, Joe. It translates, and I will mention to the audience, Joe hosted a wonderful session with people from the Bureau and IRS, and explaining their focus, their concerns, how they're organized. But the question that they did not answer is, okay, why here? Why now? Why is this taking off? So anyway.
David, I love that. And, since this is the first one, I'll start with admiration. I've been, following you and your career ever since you were at Goldman years ago. And you talk about a think tank, an organization like RAIN, and what you're doing there and how you have actually contributed to the dialogue has been equally as amazing to watch. And so we're still talking to the IRS CI guys, and we'll talk to them again next month. And we'll continue that conversation. I'll get them to answer that. But you touched on so many things, and I have a lot of reactions. So to keep it focused, the first is, people are no longer asking right now why crypto. They're asking how crypto, right? How do I responsibly get involved in crypto? But the broader question, my reaction to this, and what I was laughing at is like the proverbial elephant, right? I'm touching the tail, crypto looks like that. I'm touching the toenail of the elephant, crypto looks like that. I'm touching the trunk. I'm touching the husks. All different parts of the elephant are different countries, different regulatory agencies with a different lens. Investors are looking at crypto for the great yield that they're getting. It's attractive versus sticking your money into the banking system. You have compliance officers like myself that are looking at it not from an intelligence standpoint. Yes, I would like to understand how OFAC is, circumvented, and especially on the transparency of a blockchain and how money laundering is occurring and how tokens are being manipulated, similar to, what we're thinking of an OTCBB penny stock. I'm interested in all of those things. But what I'm interested in, and what is really, from my focus of, why crypto is all through the lens of Falcon X. We're an institutional marketplace, and we need to actually demonstrate that there's trust in our company, trust in the markets, trust in the tokens that we're actually reaching out to trade, so that the institutions coming to us, the corporate treasuries, the hedge funds, all of the institutional clients are actually feeling that we actually have a comfortable program that is very familiar to them, while it might not be something of the global regulations, domestic regulations are not yet there, right? So it doesn't look like a bank, it doesn't look like a broker dealer, but the people at the organization, the controls of the organization, they're familiar to them. So that they could say, okay, we're willing to this is the how. We're willing to get involved in crypto and make certain investments, and this is the way we're going to do it. So that was my initial reaction to this, and we could go so many different ways, David, as you know, on this one. But that is my reaction to that.
Tim, I know you've been studying the market broadly for a long time, and you have skin in the game. Sort of, maybe you can help explain what really is the message to the marketplace in terms of how cryptocurrencies have taken off.
I think the message here, I think we need to give probably just a little bit of history for those, because I think there's a lot of disinformation out there, or people just reading certain aspects of this whole ecosystem that I truly believe is changing not only the investing world but actually the transfer of money cross borders around the world and having impact. But I think people need to understand that it's still only 10, 11, 12 years old. It was built around during the financial crisis, 2008, comes out in 2009. We see it first, used on the dark net as actually for transactions, right? A medium of exchange. And that's really was the first premise around it, because especially around illicit activity, because it was labeled or branded as anonymous. We know that, there's some anonymity to it now, but it is trackable. Wallets are trackable. And then it became a store of value. And I think around the time a store of value is the time that I started investing in it. And the ability to transact, I think this has ebbed and flowed. The ability to transact with it actually decreased as it became a store of value, but now we're suddenly seeing it transact, and I think it's early stages. And I think we're still in early stages when you look at adoption curves of the internet and other technology, from electricity, all the way up to the internet. And if you look at those adoption curves, this is happening very fast when you look at the number of years it's taking place. And I think it's changing and morphing, especially with Bitcoin. Now there's 2,000 or probably more today Joe, right, than at any time. There might be more than that I'm even aware of. There's literally thousands of cryptocurrencies that have been, established, and this is no different than I think during the first of the internet stage, where there was a ton of companies being built and used, and they're no longer in existence today. So I think you have this adoption curve. I think we're in this curve now where it's a store of value, but also going back and looking at how Bitcoin can be used in transactions. You're seeing that around the world. You're seeing that with companies today that still accept Bitcoin, for transactions. They may not be doing a lot of it, but Microsoft, Home Depot, Overstock, Starbucks, Whole Foods, these companies all accept Bitcoin for a transaction. Elon Musk at Tesla did it for a bit and then backed off it. So I think you're going to see more of that. You're seeing the change in El Salvador, where it's actually a legal tender now, and 200 ATMs have been deployed, and you're seeing a lot of transactions down there. The government gave a certain amount of Bitcoin to their citizens. Again, I think this is all just this discovery phase of the adoption curve, that these are early adopters. We may not see it in the same state 2 years, 5 years, and 10 years that we see it today. But you can certainly see, if you look around the world, where there's estimates of 51 million people trading and at least 20 million people in the United States alone. There's 11,000 jobs in the crypto space on LinkedIn. The market cap value is $2 trillion. So it's certainly intriguing enough, and you're seeing institutional adoption both out front and behind the scenes in this space. And I think you have to stick your head in the sand if you don't see that there's this massive movement and change underway. But I want to go back to something Joe said, which I think is very important. So I'm excited about what the future can hold for this. But Joe went back to, and this is what I'm working on in this space, is you still have to have trust, right? Trust around the rails, trust around the system, trust around who's holding it. And that, I think, right now is just in its early stages. And people like Joe and myself are, how do you do that without stifling innovation, right? How do we put safeguards around financial interests and the financial systems for people and not stifle innovation? So there's a lot of work to be done. There's a lot of space ahead of us, but that's generally what I feel of the market today.
So responses from both of you, terrifically insightful. And let me go to this point about trust and maybe unpack what is the message of cryptocurrency. How much of the interest here is built around growing distrust of governmental institutions, fiat currency, the debasement of fiat currency, et cetera? And, from your vantage points, is there not a broader message? Because we've seen this in a whole bunch of arenas in terms of where we, what news can we trust? What candidates can we trust? What institutions can we trust? We're watching it around disinformation around vaccines and the pandemic. Is this not a sort of a medium for a message that increasingly, as a point of, I'll use your term, Tim, stored value, that there is growing distrust around fiat currency and people looking for something that is an alternative, that can provide stored value, that can provide a proxy or a hedge that gives the opportunity to make money? Joe, you referenced the fact that people can't put money in a bank anymore and earn any interest on it. How much of cryptocurrency is delivering that message to the marketplace?
Excellent. Tim and I, a few weeks ago, we were talking about the marketplace, and we talked about trust in it. And, what you saw years ago when China, who's always trying to close their markets, and not close the markets, but rather define how crypto is going to be used in their space. And they stopped mining. But what you see is, the miners left, and we actually have more mining operations in the US now because of that. People will flee and they'll go to a more mature marketplace, which I'm responding to about the fiat. I don't know if what's going to happen with the US dollar, right, from a national security standpoint. What I do know, and Tim touched on this, is that the way in which value is transferred, whether it's going to be a pegged stablecoin to the US dollar, where now the US dollar is quote unquote accessible 24/7 as opposed to just banking hours electronically because it will be pegged, using USDT as the example or something like that. The ability to move with the US dollar pegged to it or some commodity pegged to it is actually going to make it more widespread. But I do believe, based on and I believe Pat Toomey also, has a similar view. I adopt his view rather. We have a very strong structure in place, and there are all the books and everything, right? We always talk about it. People move at the speed of trust. Well, whether the regulatory regime of the U.S. or some more developed countries are a concern for the crypto enthusiasts or not, is not going to actually make people shy away from U.S. or the G7 type countries, and they will start investing their money in that. And it's that adoption curve, the Cotter adoption curve that again Tim was talking about earlier. You have the enthusiasm of the early crypto folks, and then you have the adoption of more regulatory, focused folks like myself. But yet here you come out of 2008 and you create something that you think is going to protect the world from another collapse. And it's just the contradiction of now, in order for it to be adopted, has to go back to that old world. Constantly comes up. Even the acting comptroller of currency, Sue, recently was talking about the 2008 catastrophe and how crypto is going to actually contribute to that if there's not more regulation around it, which is just crazy from the standpoint of the way that the evolution of crypto has started, and now actually how we're trying to compare that the volatility of the marketplace and the uncertainty of the marketplace might actually lead to more damage. So there's so much that you touched on and that we're touching on, from the evolution of it to the strong market conditions to the strong regulatory environment. And that's just my reaction to it. I don't know what Tim's thoughts were, but
Yeah, I think. Look, I think you hit it right on. I mean, this is all about trust. But I think David's point. If you looked at the purist, you mentioned at the beginning, David. If you looked at the purist on Bitcoin and those that are just, they believe in it. They believe in it as the future of cash and fiat and international payments, and fiat will go away and cash will go away. But they have the distrust, right? The purist has a distrust not only of governments, but also of banks and also of the commercial platforms that are actually trying to put some type of regulatory framework around this. Even the commercial sector is trying to do that, even though the government hasn't quite get caught up, which follows the curve as well. The government's generally behind with the regulatory activity and guidance. But the purists truly distrust the government, to Joe's point of how this all started in the financial crash. But the purists also have a distrust of the platforms or the big tech companies that are involved in this space, because they truly believe it is the democratization of the financial system and the financial inclusion. That's the purist. But we all know that without trust in any of these systems, there will be failure. So we have to have this public-private partnership like never before. And the U.S. has to lead this. If you see what China's doing, leading, with their digital currency, the U.S. government has to lead this in a public-private partnership. Similar, if you look back to what happened to the internet, the government, develops the internet, but it was really not. It's the commercial market that actually did the innovation and the growth. You're seeing it in space exploration today. So you have to have this commercial sector. So even the purists don't even want that, but in my opinion, they have to be involved, because that's where all this innovation. You're seeing just recently, I think this week, Twitter, has incorporated tipping on Twitter. And you can do that around the world on the app itself using, an app called Strike and a system that was used down in El Salvador. So you're seeing even these Silicon Valley, tech icons that are involved in this space heavily, because they see the future upon building upon the internet, that this is the next stage. But certainly you do have Why this was started was distrust in the current systems that we have.
And the demographics, if I can add, that you were touching on before, David, the demographics are amazing. I'm working at a institution that are, I'm working with a lot more Wall Street folks than 3.5 years ago when I first entered into the space, where I was considered a Wall Street person. But to your point, the people trading on the system, I'm learning how, ERC-20s are created by brilliant engineers, and I know that the value of engineers that I'm learning, they're looking at risk differently also, which is just amazing. When I'm saying, okay, here's our due diligence process, and we're collecting this information, and this is what we're doing. It's like the old scene in Toy Story, when they're in actually Big rather with Tom Hanks. I'm dating myself, but when they're trying to create a building in the corporate room, and they're showing how the building transfers into a robot, and Tom Hanks says, "I don't get it." Well, I didn't get it, and I'm still not getting it. And a mathematical equation that turns into a value somewhere, and there's so much to it that the older generation and the old guard doesn't get, and you do have to cooperate not only with the regulatory, agencies, but also with the engineers, the people that actually came out of 2008 and said, this is not good anymore. We have to think of different ways to do this. And we could remarkably talk about the ability of actually what it will do with the asset transfer of wealth, and the ability to actually see where your money is going to prevent fraud and bribery and all that corruption that's going on overseas and in our own backyard rather as well. So there's so many use cases to this, but we have to start listening and working with those engineers and with these folks that are actually these younger generation, which they understood this and they got it off the ground. And we can't, bastardize it by adopting it back into, pre-2008 terms and conditions, through regulations and all that stuff. So we have to have that careful balance. But it's exciting. Good stuff.
Yeah, Joe, the other thing I'll add there, and I always say flippantly, about this adoption and people getting involved, and none of us can truly see what the future holds, except knowing that technology is radically changing the way we live day to day. But, you can flippantly say, whoever thought you wouldn't go to a bookstore and buy books, whoever thought that you wouldn't go to a Blockbuster, whoever thought you'd have the amount of electric vehicles you have. I mean, you can go on and on with the use cases. There's shopping online, what's happened to malls. This is all technology driven. And this is no different. It's just now disrupting the way we've had this financial model for, the 100 years.
Couldn't agree more. So you're right. The innovation is actually touching on everything, and in order to better understand that innovation, we have to understand the roots of transferring information, and that's effectively what we're talking about with the development of the internet. This is just we're talking about in terms of asset transfers and regulations, but it's a communication network. But the national security issues that we'll talk to at later dates are really going to come down to the countries and their ability, the regimes, to be able to say, how is this going to disrupt the way that I communicate with my citizens? How is it going to disrupt my economy? How is it going to disrupt my standing in the world? And, let's say approximately 200 countries, they all have a vested interest. We talk about El Salvador, we talk about Panama, we talk about Russia, we talk about China, we talk about all of these regimes. There's no reason why none of them, if we really believe that this is the evolution of the way that we exchange money and values from shells to, e-cash, to these tokens and stablecoins, there's no reason to believe that every one of these countries are not going to be up and running from an electronic standpoint within the next 20 years. So the national security implications of that are just remarkable, and that's what I'm curious about, since we stay in that theme of curiosity, David.
All right, so as we emerge from the Wild West, I want to talk about your perspectives on where you think regulations might be going, balancing the need not to kill off innovation, but have regulations that provide sustainable trust, if I can use that word, Tim. And I would recommend for the audience, I recently reread it, Professor Ferguson at least he was at Harvard University, wrote a wonderful book called The Ascent of Money, which is basically the history of money. And so written before the advent of cryptocurrency, but it's worthwhile context for understanding a little bit of what is happening now and what may be happening in the future. But when we talk about sustainable trust in currency, it wasn't so long ago that President Nixon went off the gold standard, and it basically was the full faith and credit of the United States. But when we talk about trust around crypto, the elements that I think the regulators have to address are the issues around market manipulation, how the currencies are marketed to investors and what they know about the risks. There are fundamental security and cybersecurity issues about what can go missing very, very quickly. It is about some of the bad actors who will use the currency for a variety of means and illicit purposes. And finally, what I'll refer to as a regulatory environment where you have the resources that can investigate and oversee the marketplace to ensure transparency and fairness, and the fact that customers are not basically being exposed to fraud. It is also interesting, even though we're fortunate to have both of you on this podcast. In the future, we hope to have the future chair of the former chair of the SEC, Jay Clayton, who has also gotten involved in this in a variety of ways. But maybe you can give us your respective perspectives on where regulations may be going, but where they really need to go to sustain the marketplace and protect investors. And as you said, Joe, there are national security implications here.
Joe, you want me to kick off? Look, David, I want to start out with saying, look, this can be done in a way, and you're already seeing it happen, right? So if it can be done in a way that's using current regulatory regimes that we have, and you're seeing that play out in the U.S. when you look at Coinbase, Robinhood, Gemini, the other exchanges that a lot of retail use as well as institutions. I can remember when I was first investing, no one really knew what to do around the tax implications, right? And so that was late in coming, and then you saw that come out, 5 or so years ago. I forget the time frame on it, and you started getting, whether it was from Coinbase, or you started getting the right structure around their reporting around taxes and who owes money on what from their gains in cryptocurrency space, particularly Bitcoin. But now you see that Coinbase, abides by and has a regulatory framework around know your customer. Right. So, and no different than any of the FIs about knowing who your customer, knowing what the transactions, knowing what's happening on their platforms. So that is occurring, and similar to the same cybersecurity, and probably more so, cybersecurity regulations and cybersecurity controls in place. Monitoring for bad actors. There's commercial companies now. You have Chainalysis, you've got Chain AI that have blockchain intelligence that can look at bad actors, and a number of those companies are on contracts already with the United States government to be able to monitor and see who the bad actors are in this space. So you're starting to see some things put in place over the last couple of years, and I think at the pace it's been even-handed. But on the same time I say that, what I do worry about is the government still only has a few, maybe a handful of really knowledgeable people about this space. And so I don't think the heavy regulatory frameworks have caught up or even been devised yet on what they do in this space for the U.S. as well as around the world with all the different regulatory regimes you have around the world. So, there's a long way to go. And the balance is, keeping it a light framework, but also one that has consumer protections and trust. People don't want to be ripped off. I think it's a little bit, I talked about the adoption curve, and I think it's a little bit overblown, both from a fraud, certainly there is. Certainly there's cyber attacks, not on the blockchain itself that have been successful, but on other cryptocurrencies that, it might be the end wallets, it might be, something attached to the blockchain that's been hacked or information stolen. But when it comes to like AML and CTF, certainly state sponsors are using cryptocurrencies to, work around sanctions. Certainly there's criminal activity, but still what people, if you really get educated on it, the amount of illegal activity and money laundering with cash in the US dollar just dwarfs what's happening in the crypto space. And that may be because of the adoption rate of crypto. And, we talk in crypto at large, but a majority of cryptocurrencies in my mind will be gone. I mentioned that earlier, just like companies that were established in the early days of the internet. And you will have some of these stable coins that Joe talked about. Maybe Bitcoin, could be something else, Ethereum. But Chainalysis just recently did a study where only a third of 1% of all transactions have been used for money laundering, right? And they've got a good handle on the tracking of this. And of that, like 270 addresses were used for 55% of the activity. So you can quickly see there is visibility into it, so we can garner some trust over what's happening. But I think, I don't know what the future looks like for regulatory, other than we have to build some of the current systems we have for regulatory functions and build them in a light manner that doesn't stifle the innovation and try to shut this down, similar to what China has done.
So Tim, let me before I turn to Joe, I want to emphasize a point that you're making, which is whatever decisions are going to be made on regulation should be made upon the data, not the emotion, not episodically the last event that may have happened. But what you are articulating is, as we look at the data in terms of how cryptocurrencies are being used, the data is actually fairly favorable in terms of its exposure to criminal activity and illicit state-sponsored activity. I will note, simply draw upon my days at the U.S. Attorney's Office and your days at the FBI and Joe's days. The coin of the realm for illicit activity around the world has always, or traditionally, been the $100 bill, the U.S. $100 bill, as well as counterfeit U.S. $100 bills. And, clearly what I think I'm hearing you say is that there is traceability and transparency around cryptocurrency, which has never existed around printed currency, such as the $100 bills. And just, to make sure I'm squaring the circle for the audience, what you're really an advocate for is regulation based upon evidence and data, and also recognizing whether it's paper currency, credit cards, debit cards, etc. Any instrument that involves money or the movement of money is potentially exploitable. And so it is about rational regulations and, in many respects, the systems that we've already put in place and figuring out how to leverage them and scale them appropriately. Would you agree with my summation?
Yeah, I look, you're always much more articulate than I can ever be. I'm more passionate about it than you. But let's think about this as if, just like an entrepreneur would, or the innovators in the space would, like Brian Armstrong and some of the others that have built these companies. Let's think of it in the realm of, this is a startup and we have to build regulation or a regulatory regime around this type of product.
The immediate part of regulation, right, is what is the outcome of it? What is the objection? By the crypto enthusiast? What is the objection by other folks in this world? But what is the objective of it? Is it for protection? Is it to make sure that there's transparency in the marketplace, so best execution for trading occurs from a capital market standpoint? You look at blue chip stocks. they're subject to insider trading, right? You look at penny stocks, they're subject to manipulation. The vulnerability of these products are different, and you have three choices. The first choice, they do nothing on the hill. Second is they integrate it into an existing framework. We see a lot of that going on right now with the SEC chairman talking about it and the CFTC. Or we create a new organization, and we know where the appetite would be for something like that. Probably wouldn't be any, actually. The federal functional regulators, there's a product that looks and feels, or a part of this elephant that looks and feels like something under their jurisdiction, but not under everyone's jurisdiction. And remember, this happened after the Patriot Act was passed, right? You had all of these organizations, all of these regulators, all of these institutions, saying, "Hey, guys, you're regulating us all for the same thing." And then there was the adoption curve, and the FFIEC came out with a standardized approach, and the securities regulators coordinated a heck of a lot better, and that was the adoption process. But it isn't a view that is regulation good, is regulation bad? It's a view that there needs to be an orderly marketplace, at least from the lens that we're coming from. You're looking at trading and market making activities, and nobody wants to buy, BTC, using that as the example. And I think, the number ranges, Tim, right? I think we're at like 7,000, around 7,000 tokens right now. I think it was 10,000 a year or two ago, but we're not trading all 10,000. We're not trading all 7,000. We're only trading actually, at my company and most of the institutional shops, they're trading, less than 1,000 because they're doing the token assessments. But in any event, the regulation for us is welcomed by our partners, because remember, the corporate treasuries, the hedge funds, the banks that want exposure, whether it's through an ETF or directly through a token, they want the exposure. The same way, the regulation, the same way me as a retail person, I actually enjoy going to Coinbase. There, I said it. I like it. I know they're going to be around. They it's afforded somewhat protection by the fact that the SEC registration. I buy my XLM, I buy my Cardano, I buy my CeeLo, my Scale. I still have my XRP, which they don't trade right now because I do believe in that. And there are so many things that I want to see evolve in this space in terms of regulation, but we can't, of course, stifle innovation. And that's the often cry that you hear. And we hear that in so many news cycles over the years, insert year and insert product. But, we're not talking about stifling innovation. We're talking about responsible growth here, global growth, the standardization so that people can communicate better, transfer wealth better, get money to, remittance flows out of the country to, the families. I mean, we're talking about responsible growth from an economic standpoint. So that's my reaction to the regulatory dialogue. There's still a lot of land grab that people are going to want to do, but they can't do. And I don't want to see, organizations that are led by just a couple of firms engage a regulator, pick an SEC, pick a CFTC, pick an OCC, because they don't have jurisdiction over every single aspect of the product. They have pieces of it. So I don't know what that looks like. And there are a lot of smart people in Washington that actually do have a view on that. The same way that I've actually learned that these engineers are brilliant, there are a lot of policymakers that have a strong view on that. And a lot of good people are coming out on this. I'll pause there. Hey, David.
And Joe, I understood your comments, which is, as we think through the potential regulations, it is absolutely essential to think not only about on a cost-benefit basis of what exists today, but what are the potential benefits of what is being created, invented, possibly might be re-engineered in the future. So before imposing regulations, make sure we understand what the opportunities are and what the benefits potentially could be broadly.
That's right. Coming at it from a risk assessment standpoint, right? But most importantly, the objective or the outcome for me would be that there's standardization that allows for flexibility and scalability and the actual use cases that people actually wanted to adopt and employ right outside of just trading activity. We're seeing this trading activity and we're talking about it. The news cycles are talking about it, but there's so much more capability with this, which is exciting. And Tim talks about passion, and that's what I think most of the people in this space have. Certainly passion and smarts, and to think that through. And that's why I think the regulation has to adopt for. It can't consider it just in a trading standpoint. Yes, we need to get that. We have to calm, down the markets, and we have to get rid of that volatility. It's a mess, but you know what? The standardization will allow for that scalability and orderly marketplace. That's at least my view.
So I want to thank both of you for a great inaugural session of the podcast. I look forward to a second one in about 2 weeks. We have a lot to cover, and there's certainly on a daily basis a lot that's occurring, both in terms of the commercial applications, the levels of interest, and obviously various regulatory and law enforcement concerns that are coming to the market. So I thank both of you, and I can't think of two better people to bring to the audience to help share perspectives, because you've been on sort of all sides of the trade, as they say. So, Joe, thanks so much. Tim, thanks again, as always, and look forward to reconvening in a couple of weeks.
Thank you.
Joseph Harvey is Chief Compliance Officer at FalconX, and Tim Murphy is President and CEO of Consortium.net. You can find more details about both businesses at RAINnetwork.com. RAIN is a risk intelligence company that provides access to critical insights and analysis, as well as support to ensure business continuity and resiliency for our members. We offer custom cyber risk monitoring, including tools to efficiently screen and analyze emerging risks for your business. Find out how RAIN can power your business to success. Visit RAINnetwork.com. That's RANE network.com. I'm Emily Donahue. Thanks for listening.